If we're tipping into a recession, then inflation hedges are less interesting for a lot of people. And that could be a reason for a big dip in gold and silver. So, it's not just a straight shot to the moon, or at least it very seldom is in a bull market. So expect sometimes stomach churning corrections as this goes on. And just, I would just advise keeping your eyes on the prize, which is, gold, $10,000 or so an ounce, and silver, a couple of $100 an ounce as this really plays out.
After encountering resistance last week, silver prices continue to struggle, now testing support at $33 an ounce. The precious metal remains under pressure as uncertainty surrounding President Donald Trump's global tariff plans persists. Reports suggest the administration may implement more targeted and less sweeping tariffs, potentially easing concerns over an all-out trade war. Despite these short-term challenges, silver's long-term fundamentals remain strong. The U.S. produced over 1,100 tons of silver last year, yet domestic demand exceeded 5,100 tons, making the country heavily reliant on imports. Most of the U.S. silver supply comes from Mexico, with approximately 10% of the supply sourced from Canada. Given this supply gap, a surge in demand could quickly tighten available stockpiles. A former Wall Street financial analyst, JohnRubino, highlights the growing risk of a silver supply squeeze. He notes that when industrial buyers, such as solar panel manufacturers, are forced to secure silver at any cost, and investors rush in, fearing they'll miss out, prices could skyrocket. This scenario can push silver into triple-digit territory, possibly exceeding $100 per ounce. The supply deficit further reinforces silver's bullish outlook. According to the head of commodity strategy at Saxo Bank, silver will likely break above $35 an ounce, potentially reaching $40 this year. He emphasizes that industrial demand, which accounts for roughly 55% of total silver consumption, continues to rise. Despite shifting narratives around decarbonization, the global push toward electrification remains strong, further supporting silver's critical role in modern industries. Rubino advises investors to view price dips as opportunities to accumulate more silver before a potential supply shortage drives prices significantly higher. This could be one of the last chances to buy at lower levels before the next major rally unfolds. However, silver faces near-term headwinds as the Federal Reserve maintains its outlook for 2 rate cuts later this year. Following the March meeting, the Fed kept the federal funds rate at 4.25% to 4.5%, which could pressure silver prices if risk sentiment improves. Silver may also see further volatility as the White House revises its tariff strategy ahead of the April 2nd implementation. Make sure to tune in for our expert analysis. Don't miss out on future content. Hit the subscribe button and turn on notifications to stay in the loop. Your support is greatly appreciated.
Silver might be the interesting story now going forward because it's done really well lately too. I don't remember what the time frame was, but I saw somebody saying that silver has gone up slightly more in percentage terms than gold has in this period. I don't remember what the period was, but lately silver's been doing just fine. But it's still very cheap relative to gold. The gold-silver ratio is in the high 80s, low 90s right now, which is normally a ratio that is a buy signal for silver and either a hold or sell signal for gold. So it could easily be that silver is going to start its big run now. In every precious metals bull market, gold goes up and it goes up and it goes up, and silver languishes for a little while. And then towards the end, everybody starts thinking in physical terms and envisioning, say, a Krugerrand, which is a small gold coin. And then they look at 75 silver ounces sitting on a table and how gorgeous that would look and how much silver you get for that 1 ounce of gold. And they switch to silver, so silver buying goes through the roof. It's a super thin market. And, the paper market in silver is a fractional reserve banking system where the leverage is like 100 to 1. So it doesn't take a lot of buying of silver to basically just tap out the COMEX and the London Metals Exchange and the other places where there's supposed to be physical silver waiting to be picked up, and when that happens, that's the parabolic part of this process where we start worrying about availability of silver. Not how much do you have to pay for it, but can you get any at all? And then, the industrial players who need silver, like the solar panel companies, have to get it at whatever price. And then investors who don't have enough silver catch a serious dose of FOMO, fear of missing out, and they start buying. And this little thin market goes straight up. So that's where we get triple-digit silver, which I think we will get. $100 silver is coming. And it's just a matter of the way the dominoes have to line up and then be knocked over for how it happens. If you go back to the peak of the last bull market in precious metals, silver is way below its peak, while gold is 50% up from its peak. So there's been a big divergence since 2011 or so, which is when precious metals last peaked. And there's no reason for that because the industrial demand for silver has been going up dramatically. So the silver market is in deficit and has been for the last few years, where the world's silver mines aren't producing enough silver to satisfy industrial and investment demand, which means we're using up the silver stocks that we've had above ground, wherever they are in vaults around the world. Nobody knows exactly how much silver there is out there that's available, but we're using it up. Wherever we started a decade ago, a lot of it is gone now, and a lot of it continues to be taken off the market. So there's a point at which a deficit turns into a shortage, and that shortage turns into panic buying in this kind of a process. And, as long as the industrial demand for silver stays high and silver's price relative to gold stays low, then it's a decent buy. It's something that there will be dips, but the dips are to be bought in a market like that. So whatever happens with silver in the next few months, especially if it goes down, that's one of those good things. They put something that is objectively valuable on sale. And if you don't have enough, that's an opportunity to get yourself topped up to where your stack is as big as it should be. So, mixed feelings about a correction in the next 6 or so months. It would hurt if you've got a lot of precious metals already, but it's also maybe the last buying opportunity in this cycle. And you should take advantage of it when the time comes.
Gold prices experienced a modest rally during early trading on Monday, though market activity remained somewhat volatile. This fluctuation is understandable, given how quickly gold has reached its current levels. Despite short-term noise, the broader outlook remains firmly bullish, with technical indicators supporting further gains. A breakout from a bullish flag pattern suggests that gold could climb as high as $3,300 shortly, aligning with substantial fundamental factors that continue to support the market. However, rising U.S. Treasury yields have pressured gold to decline for the third consecutive trading session. Sentiment has also improved following news that reciprocal tariffs will be more targeted, focusing on specific U.S. trading partners rather than implementing sweeping measures. This has eased some market concerns, leading to shifts in safe haven demand. Despite short-term fluctuations, the long-term outlook for gold remains highly bullish. According to JohnRubino, gold's ultimate trajectory could be seen as reaching $10,000 per ounce, while silver has the potential to surge into the triple digits. This scenario becomes even more plausible in the event of a significant currency reset, which could drive precious metals to unprecedented highs. Let's get back to the interview.
PSLV is trading above net asset value. They issue stocks and use the proceeds to buy more metal. Okay, right. Preventing that is something that might happen when people behind the scenes start running out of silver. So yeah, that could be an explanation for it. I never understand the technical side of what happens with the ETFs, because there's always something weird going on with somebody naked shorting this and pulling metal out, and most of the time it hasn't really resulted in any extreme movements or anything, but it's completely understandable in a market. That is amazing short volume, And
so you've got PSLV here in yellow and then SLV here in red.
Yeah.
And you can tell all the short buying is on the PSLV side.
Yeah. Okay. Well, when a market that is somewhat manipulated and it's a fractional reserve banking kind of market, and when trouble starts happening behind the scenes, you should expect weird stuff to go on in the market as the big players try to get themselves out of trouble. So something like what's happening in PSLV. Okay, it could be that. It could be some of the big holders of physical silver or the big people on the hook with futures contracts that they don't know what to do with, like the exchanges. Yes, that could be a very real possibility, and we could also see an engineered bear market for these metals as a way of getting the big holder of silver shorts out at lower prices. That's something that people have been claiming that's been going on forever. where wash, rinse, repeat in the COMEX. And it wouldn't surprise me if something like that happened on a big scale here. But again, that would just be the last really good dip to buy if it happens. So, I almost want, not that I should really be buying more silver. I've been stacking for a long time. But it's easy to see some machinations behind the scenes leading to a correction, or something worse than a correction in gold and silver right now. And in part because gold just broke through what ought to be a serious resistance level. 3,000 ought to have a lot of people stacked up right there wanting to take profits. And that hasn't yet happened yet, although Friday was a pretty hard day for gold. Same thing that we were talking about with oil. If we're tipping into a recession, then inflation hedges are less interesting for a lot of people. And that could be a reason for a big dip in gold and silver. So, it's not just a straight shot to the moon, or at least it very seldom is in a bull market. So expect sometimes stomach churning corrections as this goes on. And just, I would just advise keeping your eyes on the prize, which is, gold $10,000 or so an ounce, and silver a couple of $100 an ounce as this really plays out. That's what it's going to look like when we finally do the currency reset. And in the meantime, there will be all kinds of manipulation and all kinds of corrections and spikes. And, it'll be a very volatile market. But if we're looking at where we want to end up and where we expect to end up, then the corrections are buying opportunities. And, I'll add one more thing there. No individual correction is a 100% buying opportunity. Do not use the next drop in gold and silver to put all your money in. Continue to add gradually over time, but just add a little more if you get a really nice correction. But you never know what the next correction will be after that. So you don't want to 100% invest in precious metals or anything else until it's so obvious that, it's FOMO everywhere you look. And then, pay up what you have to pay up at the end to get completely topped off. But for now, gradual buying, dollar cost averaging is what we still should be doing, with a little bit of bias towards the upside when there's a correction. So anyhow, long-winded answer for what is very simple investment advice, keep stacking.
As silver navigates short-term market pressures, its long-term trajectory remains firmly supported by rising industrial demand and persistent supply deficits. With ongoing electrification trends and the metal's expanding role in clean energy, any temporary price dips may present strategic buying opportunities. While economic shifts and policy decisions introduce near-term volatility, historical patterns suggest that silver's potential for a significant breakout remains strong. As investors weigh the risks and rewards, the question remains: will silver's next major rally be driven by industrial shortages, investor demand, or a broader shift in global financial stability? Share your perspective in the comments section. If the video resonates with you, join our community by subscribing to our channel and enabling notifications with the bell icon. Thank you for being a part of our community.